Google, should I say Alphabet, are about to make their largest acquisition yet. The Wall Street Journal here reporting Google near $23 billion deal for cybersecurity startup Wiz. The deal would be the tech giant's largest acquisition ever. Now, of course, $23 billion, that's quite a lot of money, especially if you're buying a startup, and especially if you know how much that startup has generated last year. Let's discuss the pros, the cons, why this thing makes sense, why they're going after a cybersecurity startup. Let's talk about all of that. By the way, this is an unconfirmed news report, and even if it is confirmed, it might not go through. We've seen plenty of deals that were announced and then eventually, because of antitrust issues, it did not go through. For example, Amazon iRobot, Facebook Meta and that GIF making company, and then we also had Adobe and Figma, and probably many others as well. So let's wait and see. Today, Google stock didn't move that much, so the market does not see this as a negative just yet or a positive. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not. We're well on our way to reach 50,000 subscribers, so if you're not subscribed yet, hit that subscribe button. We'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so Alphabet is eyeing the deal at a time of intense antitrust scrutiny of the search company and other tech giants. The acquisition could also help boost Alphabet's effort in cloud computing, an important and growing business, but one where it has lagged behind peers, of course behind Azure and AWS. Wiz's valuation has soared since it was founded in 2020 by Chief Executive Officer Asaf Rappaport and several colleagues. The company, which offers cybersecurity for cloud computing, raised $1 billion earlier this year at a valuation of $12 billion, so quite the premium. It is one of the only few startups outside the artificial intelligence industry to raise money at a higher valuation in 2024. So, what does Wiz do? Well, Wiz is a cloud security platform that helps organizations protect their cloud environment. It provides a comprehensive solution for identifying, prioritizing, and remediating security risks across various cloud platforms like AWS, Azure, and Google Cloud. So here's the breakdown of its key features. Cloud Security Posture Management, CSPM, analyzes cloud configurations for vulnerabilities and misconfigurations. CWPP, or Cloud Workload Protection Platform, protects workloads, VMs, containers, serverless functions from threats. Then you've got Threat Detection and Response, TDR, that identifies and responds to cyber attacks in real time. And the last one here, Identity and Access Management Control, manages and controls user access to cloud resources. Essentially, Wiz aims to simplify cloud security management by offering a unified platform with a strong focus on automation and continuous monitoring. Of course, when you read all of this, you can now start to understand why such a deal makes sense if Google truly wants to compete or maybe even someday overtake Azure or AWS. Well, security is of extreme importance, as we've seen in the most recent attacks in the last 24 months or so. So it does make sense, and especially as more and more things move to the cloud. And by the way, this is also a market. The CSPM market is a market that is growing. It's forecasted to reach $15.6 billion by 2033. The cloud database security market was worth approximately $10.13 billion in 2022 and is expected to reach around $50 billion by the end of 2029. As more industries move data and applications onto the cloud, visibility into potential security risks or configuration issues with their cloud resources is required to maintain an optimal security stance. Now, Wiz specifically, they said it hit $100 million in annual recurring revenue after 18 months and achieved $350 million in annual recurring revenue in 2023. So yes, they're paying quite a premium. The company is backed by prominent Silicon Valley venture capitalists, including Sequoia Capital, Andreessen Horowitz, Index Ventures, and Lightspeed Venture Partners. If completed, the Google deal would mark a rare exit for these investors at a time when the initial public offering market has stalled and the antitrust environment has made startups reluctant to pursue M&As. Google has been working to bulk up its cybersecurity business focused on cloud. Its biggest recent acquisition and second largest ever It's the nearly $5.4 billion purchase 2 years ago of another security company called Mandiant. And here you can actually see the top 10 acquisitions of Google over the past, 2 decades or so. Of course, the most lucrative one is YouTube. YouTube and Instagram is probably one of the GOATs acquisition. Probably Mellanox as well from NVIDIA. Maybe I'm forgetting some, so let me know down in the comment section below. And yes, if you didn't know, Motorola, Google did acquire Motorola. It was a whole thing about patents and Android domination, stuff like that, because they bought it for 12.5, but then sold it for like $10 billion less. So yeah. Anyways, moving on here, we already have a Bank of America comment on the potential acquisition. So they say here, per unconfirmed press reports, Alphabet is reportedly in advanced talks to acquire cybersecurity startup Wiz for roughly $23 billion. Founded in 2020, Wiz provides cloud security solutions offering visibility, threat detection, compliance, and automated remediation to protect cloud environments and applications. In May 2024, Wiz raised $1 billion in a funding round that valued the company at $12 billion. Wiz generated $350 million in annual recurring revenue in 2023 and has 40% of the Fortune 500 companies as customers. If the Wiz acquisition completed, the deal would be Alphabet's second major cybersecurity acquisition following Mandiant for $5.4 billion, as we've just seen. Now, their take is this. Deal considerations cited in the press underscore the importance of cybersecurity in the cloud, and Google likely sees an opportunity to leverage Wiz product capabilities to gain industry share. If agreed, a deal will likely face significant regulatory scrutiny. We would expect DOJ opposition, but as a number 3 cloud service provider with less than 20% industry share, we think it has a better chance in court than a consumer-focused deal. Also, deal approval process likely to have limited business disruption risk for Alphabet. Finally, the press report of a $350 million 2023 revenue run rate and plans for 1,300 employees in 2024, with operations could have limited negative impact on Google Cloud's near-term operating profit if a transaction is consummated. You know, Google Cloud is fast growing, but only turned a profit, only turned income positive for Google this year. Or should I say in the last, 2-3 quarters or so. They then said Wiz could help Google Cloud gain share in an important market. Potential positive for Alphabet if an acquisition is agreed include 1. Enhanced cloud security offering with big total addressable market. 2. Market share gain in key verticals. According to Wiz website, the company focuses on industry-specific solutions for government, healthcare, and financial sector. 3. Adds to multi-cloud offering as a challenger to larger competitors. Google offers cloud products that help customers manage multi-cloud strategies, including use of competitor clouds, and Wiz's multi-cloud cybersecurity offering could enhance Google Cloud's management products. Cloud growing in both financial and sentiment importance. Of course, there's a bit more here, so you can pause the screen if you want to read it all. Now, here are a couple of reasons for the acquisition. So 1, strengthening Google Cloud's security. Wiz specializes in cloud security, a critical area for Google Cloud's growth and competitiveness. Wiz's expertise complements Google's existing security offerings, creating a more comprehensive solution. Its enhanced security can drive cloud adoption by addressing customer concerns. Wiz brings a team of skilled cybersecurity experts to Google, by the way, also ex-Microsoft. And the acquisition would solidify Google's position as a major player in the cybersecurity market. As for the potential synergies and challenges, the challenges we've seen, right? Regulatory attention plus $23 billion is significant, but as we've seen last quarter, free cash flow for Alphabet was $16.8 billion. So, okay, I guess they'll make it up in a quarter and a half. But the synergies, combining Wiz's technology with Google's existing tools, could create powerful solutions in areas like CSPM, CWPP, TDR, DLP, and AI-driven security, as we've spoken about at the start of this video. Integration challenges, merging the two companies and integrating their technologies could be complex. This is true. This is true with every acquisition, by the way. Usually it does take time. You don't really see the positive effect straight away. Now, I do want to explain a couple of terms here because for those of you that are extremely interested and are still watching, maybe you would like to have an extra explanation of all those little letters that we've just read. So, Google's Cloud Security Command Center could be enhanced with Wiz's advanced cloud security posture assessment capabilities, providing more comprehensive and actionable insights. Then you've got cloud workload protection platforms. Wiz's agentless approach to workload protection could complement Google's existing solutions, offering customers a broader range of options and better coverage. Then you've got TDR, or threat detection and response, so integrating Wiz's threat detection capabilities with Google's Chronicle could create a more powerful and comprehensive security analytics platform. The last one here is DLP, data loss prevention. Wiz's ability to discover and protect sensitive data could be combined with Google's DLP solution to offer enhanced data protection across different environments. Now, of course, for most, myself included, when I started looking at this, when this report came out, a lot of this is a lot of gibberish, but in short, it makes Google Cloud, if this acquisition goes through, it makes Google Cloud quite competitive. It's no secret that we're going to need cybersecurity more and more. There are going to be more and more cyber attacks. So it's all about not just securing, but preventing an attack. More recently, we've seen Snowflake, right, being the target, but we've also seen on the positive side, we've seen companies like Palo Alto, like CrowdStrike, and a couple of others grow quite fast, and Microsoft as well. Microsoft has a huge cybersecurity department that, by the way, nobody's really talking about because everybody's focused on Azure and Office. So now you know. But yeah, overall, moving forward, if you have those huge cloud players, AWS, Azure, Google Cloud, they're going to be quite competitive, great for customers. But of course, it's going to be of extreme importance to have the best of the best cybersecurity department, especially if you're offering cross-cloud, if you're offering AI stuff. I mean, things are going to get quite wild in this space. And so this acquisition, although it's quite expensive, for me as a shareholder of Alphabet, Google, I don't really mind. As you've seen, $16.8 billion in free cash flow in just one quarter. Yes, it's an expensive deal, but is it going to hurt the company? I don't think so. Is it going to make the company, and especially Google Cloud, stronger, more competitive? Yes. And since they are still quite a small player in that huge ocean with two big sharks, why not? Why not make this move? Short term, yes, expensive. Long term, could make them a huge winners. That's just my opinion right now. Overall, the whole Alphabet Google business is doing extremely well. We've gone from Google, 2020, 2021, huge company, very successful, to OpenAI, ChatGPT, search is going to die, botched presentations, $100 billion hit, etc. All of that, Google went down, and now Google is back to $2.3 trillion or so in market valuation. So quite a turnaround, and I do think we can still go much higher. Whether or not this acquisition will go through eventually remains to be seen, but at least now you know everything that you need to know, why they're looking at this deal, why it would make sense, what might and might not happen. Now you know it all. Leave your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one.